I want to dig deeper into this ESG explosion. It's a broad term, but ESG basically involves looking for companies that meet positive standards of corporate responsibility. That's fair. That's not the only definition, though. Let's talk more about this with Luke Oliver. He's the head of index investing for the Americas at DWS Group. They have their own group of ESG ETFs. Luke, thanks for joining us. I guess the question is, it's a hot topic. Everyone wants environmentally responsible, socially responsible ETFs. How much interest is there really out there, and how do you sell this to the investing public right now?
Well, first of all, thanks for having me on. It's a really interesting topic. We've seen this growing trend, growing appetite for ESG, and we've seen it actually more in Europe. Currently, there's about 124 billion tracking ESG strategies in Europe, ETFs in fact, and in the US, we have 50 ESG products tracking about 12 billion, which has doubled over the last year or so. So certainly some momentum behind it. Now, how you sell it is very different to the product you mentioned a moment ago. We're not looking for a theme on a particular element of the environment or social or governance. We're actually looking at this across all of the sectors. And the way to really get a good investable product that can really be something you can use as a core strategy is something that gives you a like return to the market, like risk, and core pricing, which has been the turnoff that a lot of people have expressed in the past.
Well, I guess here's the problem I have, guys. He mentioned 12 billion. It's a $4 trillion business in the United States. It's pretty small. I guess, why is it so small? Why is it so hard to sell this when everybody believes in social responsibility? So we have environment, positive impact on the environment, social, good relations with employees and customers and stakeholders, governance, looks at leadership, looks at pay, looks at shareholder rights. Hey, I'm in favor of all that. I'll sign on. Why isn't anybody buying into this right now?
Well, it's going to get traction, and I think we both agree. There's, as Luke said, there's a huge amount of following over in Europe. We have a generation that's growing up right now that is really adamant about sticking with this type of investing. And going forward, we're going to make sure, and I think collectively in the ETF space is all going to be a part of it, that if you are not sticking to these standards, and these standards are kicked off by the UN, which is meeting next week with the Climate Week. We have major indices and indice providers that are getting together with the UN to set these standards. It's all about education, and I think we're just getting started.
Do you think this is going to make a difference long term in moving the needle on corporate behavior? And I'm asking a different question. Instead of, why aren't they selling as much? Do you think long-term this actually will make a difference?
Absolutely. I mean, the first thing is that there's a transfer of wealth to the millennial generation that have been recorded as saying they want 90% of them expect to invest through this type of socially and aware responsibility. So seeing that trend, and the fact that we're seeing something like 30 trillion is going to move from baby boomers to millennials over the next 20 years really means that companies are going to have to sit up and take notice of it. But,
go ahead.
Well, there's a key misconception, I think, that people are falling into, that ESG means that you're stepping away from performance and making some activist play, when in fact, what ESG is all about, as you said, is companies that are responsible with their supply chains and their employees, companies that have good governance around corruption, data usage, and with, as far as the environment, responsible use of renewable energies and things. So these aren't activist sentiments. These are good, solid investments for the way the world's developing.
You're not having to give up performance.
You're not.
Well, that's a good point. So let's just look at one of your big ones, USSG. That's the X-Tracker Leaders ETF, the ESG Leaders. That is tracking the S&P closely this year. It's not underperforming, is that right?
It's tracking in line with this. The USSG tracks the MSCI USA. We also have S&P that tracks the S&P 500. That's right. Both of those have low tracking error to those underlying benchmarks.
Just so we're a little less abstract on this, I want to put up, if we can, the top holdings for USSG. This has got I chose this because it's yours, and it's got $1 billion in assets under management. But your top holdings: Microsoft, 7.5%. Alphabet, 5.5%, Johnson & Johnson, 2.6%, Visa, 2.3%. This sounds like all the really high-quality large-cap names. Can you briefly explain how you end up in a top holding with a big, Microsoft has a really large concentration. Can you articulate why Microsoft meets the standards?
Yeah, well, first of all, you mentioned another fund before that had a niche theme, and then it picked stocks, and you ended up with a bunch of tech stocks, and you couldn't tie back those stocks back to why that theme. What we're trying to do is give you a performance like the S&P 500 or the MSCI USA. So our objective is to look like those, but to be aware of the E, S, and G. So companies that, in fact, I'm surprised you picked on Microsoft, but there are some energy companies still make it into these benchmarks. And why that's particularly interesting is because you would think energy company, that's got to be bad for the environment. But these companies spend more than some of the biggest spenders in renewable energy.
Can you give us an example? What's an energy company that's in the ESG?
Well, if I take the S&P just for example, Exxon is one of our larger holdings for exactly that reason. When you look at we want to have the energy sector in there because it's important that we give investors something that tracks like their benchmark. So we want to pick the best ESG stocks, and Exxon.
So you can actually make an argument that Exxon, this is pushing it, environmentally responsible. Maybe I'm pushing it too hard, but at least satisfies criteria of an ESG stock. You can make that argument? I'm asking.
We make the argument that you want to have energy in your portfolio for exactly as you mentioned today. You've seen the energy, you've seen Chevron and Exxon perform very well. If somebody took those out, then you would underperform, and we'd be back to that problem of underperforming ESG. So we pick the better ESG scoring energy companies and the better ESG scoring tech companies and so on. So we screen some out, but we keep them so that we can keep neutral to that sector.
Yeah, and here we're putting up what's in SNPE here, and you see Microsoft, Apple, Amazon, JP Morgan. I noticed Apple was not in the USSG, but it is in this one. So this gets to this question: how do you slice and dice these? It mystifies me somewhat.
Well, yeah, so in this case, S&P is a smaller. S&P 500 is less stocks than the MSCI USA, so you get down to some different ways of cutting things off. Apple, for example, we've often heard some questions around, employees and things like that.
We only have a minute left before I let you go. The cost, these are low cost relatively, right? Am I correct? What are we talking about basis points for the S&P?
11 and 10 basis points.
11 and 10, okay.
So the idea is...
So that's competitive with the S&P.
And I think that's what's going to help people come in the door. So people have historically thought it was a premium product in ESG, but now the costs have come down and they're more likely to come and take a look at a product.
And you've been sort of quiet on this. Do you actually, I'm still mystified why they can't sell it that well. I know he's trying over there, he's doing his best and there's more, but why don't people go, this seems right to me. Why isn't there a lot more assets in this group?
I think, well, these two products that he's been talking about and a couple other ones from iShares and Vanguard have all come out in the last couple of years. Investors are getting educated about these products. We at CFRA really think there's going to be strong growth within ESG over the next 3 years.
Okay, so you're bullish. Last word?
Well, we've launched 2 ETFs this year and we've raised 1.5 billion in them, so I think we're starting to see that momentum.
Yeah, there's definitely some interest there. Thank you. Very interesting discussion. Appreciate you coming on.